All right, let's talk about the housing market. Zillow just dropped its big 2026 forecast, and honestly, it's a real mixed bag. We're going to break down what it means for you and your home's value.
So this is it, right? The million-dollar question, or maybe the several $100,000 question. What's going to happen to your home's value next year? Well, Zillow's latest data says the answer is complicated, and it really, really depends on your zip code.
Okay, so before we can look forward, we've got to take a quick look back. And let's be honest, 2025 was, well, it was a rough one for a lot of people in the housing market. It really sets the stage for what's coming.
Get a load of this number, 53%. Yeah, you heard that right. More than half of all homes in the U.S. lost value last year. I mean, wow, that's the highest share we've seen since way back in 2012, right in the aftermath of the big crash. So yeah, painful is the right word.
So you might be wondering, where did it hurt the most? Well, take a look at this list. Austin, Tampa, both took a nosedive of over 6%. And you see a theme here, right? Miami, Orlando, Dallas. A lot of these Sunbelt hotspots that were absolutely on fire for a few years are now feeling the chill. It's a classic case of things getting a little too hot too fast.
Okay, so that was 2025. A bit of a downer, I know. But what about 2026? Well, here's where things start to look a little brighter. The national outlook, according to Zillow, actually has a glimmer of hope. Don't get me wrong, we're not talking about a market explosion, but it's definitely a shift.
The big national number Zillow is projecting is a 1.2% increase in home prices. Now, I know what you're thinking. 1.2% isn't exactly going to set the world on fire. But it's not about the size of the number. It's about the direction. We're moving from falling prices to slightly rising prices. It's all about stabilization.
But, and this is a huge but, there's the mortgage rates. They're just not budging. We're still looking at rates stubbornly sticking above 6%. And that, my friends, is a massive hurdle. It means that even if prices aren't skyrocketing, the actual cost of buying a home is still going to be really, really tough for a lot of folks.
Okay, but here's some genuinely good news. We're expecting to see more transactions, more people actually buying and selling homes. The forecast is for a 4.3% jump in existing home sales. Why does that matter? It means the market is getting unstuck. More inventory, more choices for buyers, just a healthier, more active market for everybody involved. So we have a slight national price increase, high mortgage rates, but more sales. It's a bit of a mixed picture, right? But here's the most important thing to understand. These national numbers, they're kind of misleading. They hide the real story, which is happening at a much more local level.
And this is really the core of Zillow's entire forecast. We're not looking at one housing market in 2026, we're looking at two. It's a tale of two markets, a great divide, where you'll have clear winners and clear losers. And the only thing that separates them is location, location, location.
And this slide just lays it out perfectly. On one side of the country, you've got the Midwest and the Northeast. Zillow thinks these areas are going to keep chugging along, seeing continued strength and even some nice price gains. But then, you look at the other side, the Sunbelt. That's where the pain is expected to continue, with more of the price drops we saw last year.
So just how big is this divide? Well, look at this. Zillow is forecasting that prices will fall in 214 different markets. That's 24% of the country, nearly 1 out of every 4 markets. Think about that. Even with the national average ticking up, a huge chunk of the country is going to be moving in the opposite direction.
Okay, so with all this talk of a great divide and falling prices, you might be thinking this is all bad news. But is it? Zillow's take is not really. The big picture here, even in the struggling areas, is actually less doom and gloom than what we just went through.
This chart really drives the point home. Look at 2025. 24 of the biggest housing markets in the country saw prices drop. That's a lot. Now look at the forecast for 2026. That number gets sliced in half, down to just 12. That is a massive improvement. It's a huge sign that the worst of this housing correction could finally be in the rearview mirror.
And you don't have to take my word for it. Here's a quote straight from Zillow's research team. There's less doom and gloom expected than in 2025 for some markets that saw large price declines this year. So what they're saying is, nobody's promising a massive boom, but things are settling down. The crazy volatility is fading, and we're heading towards a more stable, predictable market, even in those places that got hit pretty hard.
So we land on this final question, which is really the most important one. In a market that's so clearly split, where's the opportunity for you? It all comes down to knowing your local market inside and out. Are you in a place that's set to grow or a place that's still correcting? Because in 2026, knowing the answer to that question is everything.